Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is Aisha. Over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's get started by looking at the international handover and what a streak coming in for Dow, right?
Well, absolutely, Shanti. We spoke about this yesterday, day before yesterday, and now even today's 7th consecutive day of gains for Dow coming in. But let's also take a look at what happened in the overall markets then. And US stock futures were little changed last night after Dow, like we mentioned, it's posted its longest win streak going back to December. Wall Street is coming off a positive session for the major averages. The blue chip Dow has advanced 0.8%, registering a 7th straight day of gains in the benchmark's best showing since a 9-day winning streak in December. So we'll just have to wait and see if this 7-day streak can get converted for can continue for 2 more days and can beat that 9-day streak as well. The S&P 500 gained almost 0.5%, closing above 5,200 for the first time since early April. Meanwhile, on the other hand, you had Nasdaq that rose almost 0.3%. Investors have been more optimistic lately after the Fed Reserve indicated the next move is unlikely to be a hike, pointing to a cap on interest rates that could be bullish for equities. A strong earnings season as well as some softer labor data have also bolstered confidence in the stock outlook as well. Stocks are on pace for a winning week or at the end of yesterday's trading session. The Dow has gained 1.8% on a week-to-date basis. S&P 500 and Nasdaq are also higher by 1.7% and 1.2% respectively for the week. A slate of central bank officials are scheduled to speak today, including Fed Presidents Lori Logan of Dallas, Neil Kashkari of Minneapolis, as well as Austin Goolsbee of Chicago. All of these commentaries will be closely watched out for, since we've had a series of Fed presidents give their comments over the last couple of days on where they see the rates going ahead. Now, Fed Governor Michelle Bowman will also be making an appearance, so we'll be keeping a close eye on what this person has to say as well. And on the economic front, May consumer sentiment data that's due out today after market hours in terms of US time is expected to ease slightly to 76, down from 77.2. So we'll just wait and watch how that pans out. But Shanti, also tell us what's happening with the world of oil, because equities are looking solid as of now. Good handover coming in, but is it the same for oil?
Absolutely, and it's very interesting what we're seeing play out with oil prices, right? Because oil prices edged up to a 1-week high on data from China and the US, signaling demand in the world's 2 biggest crude consuming nations could climb. So now when you look at price levels, then Brent futures rose about 30 cents or 0.4% to settle around that $83 a barrel mark, and US WTI as well rose about 27 cents or 0.3%, settled around that $79 a barrel mark. And that was the highest close for both crude benchmarks since April 30th. Like I mentioned, that high coming in for oil prices, and limiting those price gains was US energy data showing gasoline and diesel demand last week was the weakest since the 2020 coronavirus pandemic as well. And in China, meanwhile, you did have crude oil imports that rose on the previous year in April, and exports and imports returned to growth last month. Now, this of course indicates an increase in demand at home and overseas as Beijing moves to shore up a shaky economy as well. And that's about China then. But when you look at the US, of course, the number of new claims for unemployment benefits rose last week to the highest in more than 8 months. Further evidence, of course, that the labor market was cooling, and analysts also projected that ebbing labor market momentum puts 2 interest rate cuts from the US Federal Reserve this year back on the table as well. So that is something that the oil market will be looking out for. But when you take a look at gold as well, gold prices climbed over 1%. Spot gold rose over 1% to 2,335 per ounce. When you look at silver as well, there was an uptick of about 3% coming in for silver as well. So quite the interesting move for gold, silver as well as oil.
Well, absolutely. Oil and the metals, good moves coming over there as well. But with that, let's also take a look at all the important events you need to be watching out for in today's trading session. And well, from India today, you have the industrial production data coming out, as well as the country celebrating Akshaya Tritiya. So we wish all our viewers a very happy Akshaya Tritiya today. But moving on in terms of global cues, then from the US, you have the University of Michigan consumer sentiment. And from the UK, very important numbers coming in. Like India, you also have industrial production data coming from the UK. But apart from that, you have the UK GDP data also coming out today, so keep a close eye on that cue as well. Shifting focus back home, let's talk about some earnings then. And we have 3 earnings today. We have a lot of earnings today, in fact, in terms of the broader markets today. But when you take a look at the Nifty earnings today, 3 earnings are coming on that front. You have Cipla, Tata Motors, as well as Aisha Motors. That will be in focus today. But shifting focus then to some corporate action, then the TIL rights issue will be closing today. So today is the last day to subscribe for that if you wish to do so. And today is also the last day to buy the shares of Aptech, DCB Bank, RK Forgings to be eligible for their interim dividend, and HDFC Bank, Bank of Maharashtra, Transformers and Rectifiers, as well as UCO Bank for their final dividend for the year. In terms of primary markets then, it's the last day to apply for the TBO Tech as well as Aadhar Housing Finance IPOs. Both those IPOs will be closing for subscription at the end of the day today at 5 p.m. So that's one important cue to watch out for. And lock-in period is also going to end for DCX Systems. 20% equity coming out of lock-in on that front as well. Now, when you focus out of the markets and take a look at what else is happening, the Supreme Court is expected to pass an order on Arvind Kejriwal's interim bail today. On the flip side, PM Modi is going to be holding a roadshow in Bhubaneswar. The ECB will be publishing account of its April policy meeting that happened a few days ago. And we also have important commentary, like we mentioned earlier, coming from different Fed presidents. So while we'll be watching out for all of these cues in today's trading session.
Absolutely, lots of commentary to keep an eye on, but let's kickstart our coverage this morning with key updates on the geopolitical front then, and after the latest comments from the US President Joe Biden, who warned of withdrawing armed support to Israel if Rafah was invaded. Israeli Prime Minister Benjamin Netanyahu has rejected international pressure, and in his latest comments then, he has said that if forced, Israel will stand alone in its war against Hamas.
Well, let's shift focus, and Bank of England has moved one step closer towards lowering borrowing rates, and officials of the central bank and Governor Andrew Bailey express optimism over macros, saying global inflation shocks are fading. The Bank of England went ahead and voted to hold interest rates at 16-year high of 5.25%. This makes it the 6th policy meet where the central bank has held rates. However, commentary hinted that a cut was in sight, the first one, if at all, since March 2020.
Well, absolutely. And staying with central bank action, then San Francisco Fed President Mary Daly has said that uncertainty about the inflation outlook has increased and made it difficult to make projections for policy until the central bank gets more clarity. Instead, she outlined 2 scenarios for rates. One has inflation resuming its downward trajectory with a cooling job market, and in that case, lowering rates would be appropriate. The other one has inflation continuing to stall out, making it difficult for them to ease.
And while we're at it, let's shift focus to the US labor market. Initial filings for unemployment benefits have scaled their highest level since August last year. Jobless claims totaled a seasonally adjusted 231,000, up 22,000 from the previous period. The increase in claims follows a string of mostly strong hiring reports, though hiring in April was light compared to expectations. Job openings too have been declining amid expectations of a labor market slowdown.
And shifting focus to a couple of earnings then, Warner Brothers reported a miss on both Q1 top and bottom lines. Despite strength in its streaming unit, company net loss narrowed to $966 million versus the $1 billion figure last year. Meanwhile, British chip designer ARM reported a 47% rise in revenue on a year-on-year basis. However, it was company's revenue guidance that left investors unimpressed. Shares of the company closed 2% lower on the lackluster guidance.
Alright, well, that's a wrap on all the global stories we've been tracking for you bright and early this morning. So on that note, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned. Hi there, welcome back. Thanks so much for staying tuned. Let's talk about some earnings then. Yesterday during market hours, the biggest PSU bank SBI has reported healthy set of numbers in the fourth quarter. PAT and NII have come in higher than what the analysts were expecting, and there's been a significant improvement on the asset quality front as well. Moreover, slippages have fallen, and it just looks like a healthy quarter coming in for SBI. My colleague Gaurav is here with the earnings fine print as well as what brokerages have to say for the stock this morning post its quarter four numbers. Gaurav, good morning. Take it away.
Well, yes, we have seen beat across all the parameters in SBI. We saw that net interest margins improved, asset quality also improved, and advances and deposits growth was also healthy. Apart from that, if you look at some of the key commentary coming up from the management has now capital. And on back of this, now if you look at brokerages also, they are being very bullish on SBI. So we have got a few brokerages. So talking about Kotak Securities, now they have hiked the target price for SBI to 950 rupees on the back of these strong results. What they believe is that there is less to worry even when they look at the incremental news flow that is coming for SBI, and the outperformance can be unlikely from here on SBI, but they have now hiked the target price to 950 rupees. Investec has also increased the target price to 850 rupees while maintaining buy rating. What they believe is that domestic CD ratio is actually at a best level if we look across the other banks in PSU sector, and LCR may be a limited factor for SBI from here on, but apart from that they believe that the results were strong. Lastly, if you also look at Nomura, now they have also increased the target price to 1000 rupees versus what it was at 825 rupees, because they again believe that LDR at 75% is lowest amongst the peers. And lastly, management is also expecting OPEX to remain low, which can actually help SBI to grow further. So on back of brokerages, it seems that they are also being bullish on SBI. We have already seen more than 1% move coming up in SBI in last day's trade. So definitely watching out on how SBI performs in today's trade.
Well, absolutely, Gaurav. So that's the verdict coming in from the brokerages on SBI. But my colleague Ankur also had an exclusive conversation with SBI's chairman, Dinesh Kumar Khara. Let's listen into a slice of that conversation as well.
The GDP grows at the numbers which have been indicated, which is about 8%. Around 8% plus 5% roughly for inflation plus 2%. So about 15% kind of a growth is something which we expect as far as we are concerned. Irrespective of the base, we should be in a position to grow at this pace if GDP grows at about 8%.
How is the corporate availing the credit? What kind of atmosphere is there currently? What is the limit which you are seeing?
What I'm observing is that normally the capacity utilization limits have been hit to the extent of about 75%. And that is one of the reasons why we are seeing much better availment when it comes to working capital. It has almost gone up by about 10% as compared to last year. And similarly, when it comes to the availment of the term loans, against the sanctioning, it has improved significantly. Now the unavailed term loans are only about 18%. So that is a very clear reflection that of course, the availment has improved. Secondly, the kind of pipeline which we are seeing, about 4 trillion worth of pipeline, that is nothing but a reflection of the corporate in the Indian economy, and that is the reason why such kind of investments are being committed by them.
Reserve Bank of India has recently come up with draft guidelines on project financing. Although these are draft, but still they have specified the time it will be implemented, the quantum which you have to provide for. What is your assessment? Have you done some homework on this?
Well, as of now, it's a draft paper, and we are in the process of evaluation. And it will be a little premature to comment on that. But what my broad sense is that it would not be something which is formidable for a bank like us. But nevertheless, we will be sharing our views with the IB as well as with Reserve Bank of India. And hopefully our views will be given due cognizance and before the final guidelines are brought in.
Net interest margins have been challenged not only for your bank but for other lenders as well, with the kind of cost of funds rising and the deposit repricing which you may have to pass on. What is your assessment for the next financial year? You will be able to maintain this level?
Our effort and endeavor is to ensure that we maintain this level, and we expect that when it comes to our deposit rates, it appears that we have plateaued already. And henceforth we should be in a position to improve our yield on advances also, and that is the reason why I feel that whatever little increase would be there in cost of resources, even that can also be passed on, and we should be in a position to maintain the NIMs at these levels.
Alright, well, that was my colleague Ankur in an exclusive conversation with the chairman at SBI, Dinesh Kumar Khara. But we have Gaurav standing by with us. And Gaurav, let's come back to you, and thanks so much for waiting by. Now that you've told us about what brokerages are flagging off for SBI, also tell us what other stocks are on their radar this morning.
Well, yes. First, let's begin with Asian Paints because we saw that weak results came out yesterday. And if we look at brokerages also now, Investec, while maintaining sell rating, now they have cut the target price to 2,660 rupees for this counter. What they believe is that this was another cut below consensus EPS. Apart from that, they also believe that market share gain by other players may hamper the top line growth for Asian Paints. And because of this, they also expect FY26 EPS to be lower than what we have seen for FY24 for the company. And on back of this, now they have cut the target price. Next, let's talk about HPCL because Citi has now maintained buy rating and cut the target price to 630 rupees. What they believe is that a refining-led miss is what we have seen in Q4 FY24, but they retain buy rating because of the positive outlook that they have. They believe that any kind of weak pricing, if we see in this stock, could be a buying opportunity for investors from here on. And last, let's talk about vehicle financials because Goldman Sachs has now downgraded Mahindra and Mahindra Finance to sell rating and also cut the target price to 233 rupees while maintaining buy rating for Shriram Finance with a target price of 2,864 rupees. What they believe is that credit cost for ECL, given the ECL norms, could be higher for Mahindra and Mahindra Finance. Apart from that, they also believe that cost to income ratio could be higher for Mahindra Finance if we compare it with Shriram Finance. And lastly, they are also expecting moderating loan growth from 25% level to somewhere near 15% level for Mahindra and Mahindra Finance from here on, and that is why we are seeing this downtick coming up in the target price from Goldman Sachs. Lastly, they believe that re-rating may come up in Shriram Finance, and that is why they are being bullish on that counter as well. So on back of brokerage notes, we will watch out for these stocks because a strong word is coming up from brokerages on these stocks as of now.
Well, absolutely, Gaurav. We'll keep an eye on all of those counters. That's the brokerage verdict coming in on all of those counters. But let's shift the spotlight back to earnings then. And it was a strong set of numbers from BPCL for the quarter gone by. The company announced bonus shares as well as dividend for the shareholders. Somit is standing by with all the number crunching. Somit?
Well, BPCL in the fourth quarter, if you see, has reported a strong set of numbers. Revenue, though, were up just 1%, but if you see the EBITDA growth, that was nearly 48% on a sequential basis. Net profit was up 24%, but that was impacted by a one-off of close to around 1,800 crore rupees owing to an impairment of investments done in one of its subsidiary. If we remove this one-off, then the net profit growth was nearly 64% on a sequential basis. The company also announced a bonus issue of around one free share for every one held, that is 1:1 ratio, and also the dividend amount was around 21 rupees per share, which translates into a dividend yield of close to 3.5% currently. Now the crude throughput, that was up around 5% on a sequential basis, while the marketing volumes were also up around 6% on a sequential basis. Now sequentially the numbers were good because of a better marketing performance, which also partly offset the weakness that we had seen in the refining business. Refining business was weak because the gross refining margins, or the Singapore gross refining margins, were weak on a sequential basis, while the marketing segment performance was stronger on the back of higher gross marketing margin. Now if you compare BPCL's performance with its peers like Indian Oil Corporation and HPCL, it has reported the best number in the fourth quarter of FY24, because if you see, it was the only company which has managed to beat the analyst estimates in the fourth quarter. Its numbers were around 2% higher compared to what the street was expecting. As against that, Indian Oil Corporation's number were nearly 33% lower compared to analyst estimates, while HPCL's EBITDA number was nearly 6% lower compared to what the street was estimating. On the GRM front, BPCL has reported the highest GRM at around $12.5 per barrel. Its year-on-year change in debt was also the most. Its debt has come down by nearly 48% compared to FY23. And also, if you look at the company's valuation, that is the only oil marketing company trading below its historical average. If you see the 12-month forward valuations of EV to EBITDA of BPCL, it's at around 6.4 times, while its historical average stands at close to 8 times. So BPCL has outperformed its peer in the fourth quarter of FY24.
All right, Swami, thanks so much for taking us through that. All eyes will be on BPCL on the back of that news flow. But let's move on then and talk about the latest developments happening at Air India, because Air India Express cabin crew have withdrawn their strike after airline agrees to look into issues raised by them. The airline has also reinstated the 25 senior crew members who were sacked yesterday. Sumit Chaturvedi, my colleague who's been tracking this story very closely, is joining us with all the latest details on this. Good morning, Sumit. Take it away.
Now it looks like there is breakthrough coming in the whole impasse. Today, the whole day meeting went on in the Office of Labour Commissioner in Delhi. After that, Air India Express management has agreed to reinstate 25 workers who were terminated. The contracts were terminated Now workers have resumed work immediately. Also, Air India management said, Air India Express management said that they are going to look into the concerns and to address all the issues as far as employees are concerned. So it looks like there is immediate solution to the problem now. Crew is joining back, and there the problems look like from the last 2 days there were cancellation of around 200 flights. Well, that is going to come down, it looks like, tomorrow. But situation looks like it is moving towards a solution, and overall there is solution which is there because of the intervention of Labour Commissioner. That is the procedure which is generally followed in such circumstances. So yes, the impasse, the breakthrough is there, and the stalemate, finally some solution is looking very visible.
All right, thanks Sumit for all of those important details coming in on Air India Express. But let's get a move on then. And PepsiCo has initiated trials to replace palm oil and palmolene with a combination of sunflower oil and palmolene in its products. This decision follows criticism over using cheaper ingredients which are considered unhealthy in packaged foods in India. Let's go across to my colleague Sumita Kari, who's standing by with all of those important details. Sumita?
Yes, PepsiCo will be reducing sodium content in some of its products. At least 3/4 of the 75% of the company's portfolio volume will not exceed 1.3 milligrams of sodium per calorie. And that's a goal that the company is looking to achieve by 2025. Important to note that PepsiCo has Quaker, Doritos and Kurkure in its portfolio. Now, that's not all. The company has also started trials to replace palm oil with a combination of sunflower oil and palmolive oil in its products. In fact, the trial started last year itself. The company, however, when asked by ET, now has not really given any timelines by which this decision to replace palm oil in its products will come into effect. It says, and I quote, "Ingredients are listed on every product we sell in India, allowing customers to make conscious decisions about their purchases." Now, remember, this is coming in, of course, as a backlash grows over unhealthy contents in packaged foods. But important to also know that PepsiCo is one of the very few players that started to make changes last year itself, especially with respect to this decision to replace palm oil. Now, last week, Nestle also said that it's working on a no added sugar variant of its Cerelac brand. Remember, palm oil is being used in dozens of snacks, from chocolates to biscuits, breads and more, and of course is cheaper than sunflower oil. But many companies have gotten backlash from food influencers to experts over the use of palm oil, which not really is healthy. It is unhealthy, and India imports over 23% according to industry estimates. But a great step really coming in as far as PepsiCo is concerned with its decision to reduce salt content and of course to replace palm oil.
All right, good news coming in on that front from PepsiCo for India. But viewers, with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back after this quick break with more stock-specific news and updates. You stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's shift focus back to some updates coming in then. And Sula conducted a con call on their financial year 25 business guidance, where they're aiming at double-digit volume growth. Aisha is standing by with all the key takeaways. Aisha?
Well, yes, some important management commentary that is coming from the management of Sula. And first up, they've spoken about volume guidance, where they are penciling in double-digit volume growth for FY25. As far as their elite and premium segment is concerned, they are penciling in volume growth of about 15%. And for regular business, they are penciling in volume growth of about 5 to 6%. As far as margins are concerned, the management clearly highlighted that margins above 30% mark are not sustainable, and 27 to 28% EBITDA margins are sustainable going forward. They also expect to maintain the current market share. Remember, they did gain some market share in FY24, and they expect to maintain that going forward. Now, Maharashtra contributes about 52% of their total revenue, and they've also started to increase their sales from non-core markets outside of their key markets of Maharashtra and Karnataka. They've always maintained that it is a pure wine company, but now they are looking at opportunities outside of their wine business, and they say that inorganic opportunities can bring in synergies and opportunities not only for Sula but also for the target company. They're also seeing a lot of opportunity as far as their wine tourism business is concerned. They are looking to expand over there. We also have a note that has come in from CLSA this morning, where they have downgraded the stock to underperform rating. They've cut their target price from 819 to 515 rupees per share. They say growth is a key concern across its key markets. Margins have disappointed on account of higher operational expenses in the quarter gone by. So management commentary is quite weak. For full year FY25, they are penciling in double-digit volume growth, but first quarter FY25 could be weak on account of election-led restrictions and higher heat. But all in all, a management commentary is cautious, and CLSA has also gone ahead and downgraded the stock.
Alright, Aisha, thanks so much for taking us through that. Sula will be in focus on the back of numbers and the brokerage note that Aisha just told us about. But Aisha, while you're with us, also take us through all the other stocks that will be in focus today on the back of earnings or their respective news flows.
Well, yes, first let's talk about Solara Active, and this is on the back of their rights issue, where the board of directors have approved rights issue to the tune of 450 odd crores. Issue has been priced at 375 rupees per share, which is at a discount of about 25% as compared to yesterday's closing price. Shareholders will receive one equity share for every 3 equity shares that they currently hold. So on account of this rights issue that has come through, keep an eye out on Solara Active. Moving on to PNC Infratech, where the company has won orders worth about 399 crores from NHAI. Brigade Enterprises will also be in focus. Real estate stocks have been in focus for the last many trading sessions, and this on the back of a new project where the company said that they will be developing a residential project in Bengaluru with a gross development value of about 660 crores. Tata Motors, on the back of an Economic Times report where ET has reported, citing sources, that they will be spinning off its NBFCs and they will merge that NBFC part with Tata Capital company to get shares in IPO bound Tata Capital. So this is an Economic Times report, so keep an eye out on Tata Motors as well. ICICI Lomar, meanwhile, on the back of a block deal that took place yesterday, Bharti Enterprises sold 0.8% stake in the company at about with a transaction value of about 663 odd crores. And lastly, let's also talk about Tata Steel. We are getting to know from agencies that unions in UK have voted for strike over UK job loss. Remember, company had earlier informed that they will be shutting down their Port Talbot plant and that they are in conversations with trade unions, but now perhaps the conversations have not gone the way they expected. The stock will be in focus on the back of that.
Alright then, so those are the stocks that you should keep an eye on, but also keep an eye on stocks from the FMCG pack, because Morgan Stanley has reported a mixed view on the entire FMCG pack. They've downgraded Dabur and HUL, and they've come out with an overweight rating on GCPL as well as Marico. Vinny is standing by with the key takeaways of this report. Vinny?
Good morning. So yes, an interesting report that's come from Morgan Stanley. What they're saying is that they believe that the FMCG sector or the companies over there, they're losing their growth fervor, and that's why they've downgraded some of these names. Key takeaways from this report that one should highlight is what they say is that the cyclical upcycle is working against the staple stocks versus the discretionary side. They're saying it's time to reset these staple companies' growth algorithm, and that could be something lower that we could see and watch out for versus what we've seen in the past for these companies. Competition is increasing in some of these emerging fronts, whether you look at it in terms of the pricing of products, performances, as well as the path to consumers is something that is seeing a lot of increase in competitions on these 3 lines. Rural growth, we've spoken about this, in the short term, maybe that volatility is there. They're keeping an eye out on rural growth, which is not bringing a sharp recovery. So yes, that is still something that they're watching out for, and overall they're preferring consumption cyclicals, so that's more on the discretionary consumption side versus the staples, which are more defensive. That is why we're seeing that they've downgraded Britannia, cut the target price for Britannia as well, downgrading Dabur to an underweight from a previous equal weight, cut the target price there, as well as in terms of Nestle also they're maintaining their underweight rating. Other than that, what they like is, when you look at it, ITC, they hiked the target price to 510, maintaining their overweight rating, while in terms of overall Varun Beverages also they're maintaining the overweight rating. Godrej Consumers hiked the target price to 1,231 rupees, and Marico also they've hiked the target price. So yes, a bit of a mixed too. They're more on the discretionary side. They expect that to do much better. better than the staples, which is more defensives.
All right, Vinny, thanks so much for taking us through that. The FMCG sector is going to be in focus on the back of that note coming in from Morgan Stanley. But let's move on and talk about two of the three nifty companies that will be reporting their numbers today. From the auto pack, you have Tata Motors and Aisha as well. So my colleague Shrishti is standing by with what the street is expecting from these numbers and the factors to watch out for. Shrishti, take it away.
Well, yes, the trend does suggest that the auto companies are posting good set of numbers, not just the numbers, as well as the commentaries on the positive side. Similar kind of an expectation is what we are having from Tata Motors as well as Aisha Motors. Firstly, let's talk about Tata Motors. Here, the key to watch will be the JLR EBIT margins, because once again, we are expecting an improvement in that particular number. 80 basis points of uptick is what we are expecting, and 9.8% is the expectation there. While if we look at the India business, that's not quite a mixed bag this time around, though the commercial vehicle volumes were not that great. The passenger vehicle volumes have done pretty well, and this time all in all we are expecting an EBITDA margin jump on the back of the price hikes and improvement in the volumes as well, and 40 to 80 basis points of increase on a quarter-on-quarter basis is what we are expecting on the margins of both of these segments. Other than that, on the consolidated basis, RI will be on the margin figure. 14.1% is the expectation there, so any beat will be taken positively. Profit expected at 6,255 crores, while the revenue expectation is of 1.2 lakh crores. Other than that, the commentary related to the demand outlook, especially for their JLR division, which has been doing pretty well with the higher sales of the UVs, will be the key to watch. Now let's talk about Aisha Motors then. This time the mix was indeed quite good, because sequentially there has been a jump of 24% in the Aisha Motors VECV volumes, and that's expected to support. All in all, we are expecting an increase of 60 basis points on a quarter-on-quarter basis in terms of the margin. 26.6% is the expectation there, while the Royal Enfield margins are expected to be just flat sequentially at 27.5%. The company has improved the category and the mix of 350 plus cc category improvement on a YOY basis, and that's expected to support. Profit figure expected at 933 crores, while the revenue expected at 4,228 crores. Here too, the outlook will be on the demand outlook will be the key to watch. So all in all, good expectation from both of these companies.
All right, then we'll definitely be keeping an eye on those data sets coming in, those earnings, of course. And then with this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehisha, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere, because the market takes all of the action forward.